All right, hey guys, just a quick video here on how to analyze silver, like where you'd want to find a pullback in by looking at this chart. So a few things that we'll go over real quick. Um, there's a setup in this high tight flag here that's kind of a low risk setup, but a couple things to realize. The first thing that I would notice on this chart is the price reversed in the window, right? So we're always looking for the 1.272 window after an XA drive. And harmonics these are XA moves. Your first obvious drive with at least a 382 pullback. So you always want to measure your first pullback, right? And then you can measure and make sure you're trying to find a price reversal in this window right here. Wicks are okay, but you don't want closures outside of here unless they're hard reverses back inside of this zone. So we call this the window, right? And then we're looking for two things after this happens, right? So once we see a price reversal in this zone, a really good risk to reward setup would be the cipher pattern here, but we can't always rely on that, right? We would always be looking for two things here. I'm going to pull this off here because that would be best case scenario. That is not very likely. But I'm going to tell you other ways to find pullbacks, right? So there's another possible pattern in this window right here, and I'll show you exactly what we look for in the window. And this isn't a high tight flag pullback. This is a little bit more advanced harmonics, but this is something that you can find really, really good low risk and high reward trades, right? So we'd be looking for deep triangles, right? So this is a deep triangle because it has a 786 pullback. So if you do use your Fibonacci, which I'll just show you, so it makes a little bit more sense. And then C can't go outside of A, so it got very close. I actually like it more down here for a butterfly pattern, but as long as it's inside of this A, it is okay. And technically, the price reversed really hard right here, which you'll see that happen very often inside that window that I just showed you guys. So, I mean, technically, you could put it up here. You could really just put it there if you want, because that's really where the price came back to. So, the market didn't respect this price, and that's why there's a wick put in there. But this is what we'd be looking for, and why we'd be looking for this zone, right? So you would use your 1.272 extension to find this pullback, right? And once you find that pullback, you start to look for structure, and right, structure is important. Memory, a price always has memory, so we're always looking for where the market reversed, and then candle closures on that level. So you can see 1, 2, 3, 4 wicks or candle closes on that level. So it could be structure. We even look back over here. There's structure here. So you could take a low risk setup right from this area right here. This is a high tight flag butterfly pattern, which does tend to work very, very well. So if you wanted to take this trade, you would really want to put your stop loss below the 1.414 extension. You would want to aim to 3.382. Get your stop loss to entry right here. Take half of your profit. If anyone's traded silver, at least in futures, if you're trading full size contracts, this isn't a very expensive trade, and you can make a lot of money just from here to here. But that's kind of how you do it. So, TP1, your stop loss goes to entry, you take half off. TP2, you take half off. And then TP3, you would want to take, your last take profit, or just move your stop loss to entry. I'm sorry, or just let the price ride, because when it breaks out of here, it has potential to go much, much higher. Okay, and then what we'd be looking for. We're always trying to connect patterns. So we have a plan A, and that would be this setup right here. This is a high tight flag pullback butterfly pattern, which we use every single week. We trade this one all of the time. This one works very, very well. And then we have, best case scenario would be this, this cipher pattern, right? Because we have at least a 382. We have a drive up into the window. Price couldn't close outside of 414, and then we're looking for, right? We're looking for a 786 retracement. You see a lot of guys that are going to post. They'll say I'm sorry, my dog's making a little bit of noise here in the background. Thinking that you can, just buy these levels down here. I'm going to explain to you how you can use these patterns, but unless you really know what you're doing, you really don't want to be taking any of these lower levels and trying to trade up to here unless you have another pattern, right? So once you have this pattern here, you could potentially trade this thing up to this bat pattern 886, right? Because the price likes to go to those levels. So let's say this cipher pattern traded down here. This is how you combine harmonic patterns. This is very, very advanced. There's a lot of people that post patterns like this, but they don't really understand how exactly how to connect them. But let's say the price did pull all the way back down to this D point, right? So once we're lining up our D point at 786, we want to find structure down here, right? And when you're finding structure, you always want to change time frames. That's super, super important, right? So, you're in a daily time frame. Typically in a 1 to 4 hour, you would want to switch, check all time frames to find candle closures at this level, right? And then if you could say 786 looks like a solid level, this is what I would be looking for on a pullback. This is another pattern that we trade, which also has some structure, but not that much. That's not a harmonic pattern, but it is a very, very, very profitable pattern that we use. And that would be just watching the golden ratio on a pullback. You got to make sure you always readjust your fib levels, right? But then you can start connecting patterns. So, if you got a pin wick bar, a pin bar, engulfing bar, or inside bar off this level, then we can start thinking about trading up to this level, right? Because this is 886 of this bat pattern. So, eventually the price is probably going to come up to here and most likely even higher. I think it will. For many reasons, I'm not going to get into those, but on a macro level, there's a good chance we could break out of this level. But you will even see, so say the price is going to actually break outside of this bat pattern, you could still have a nice reversal. You could pull back down into this structure. And then the pattern still works because it's profitable, but you could get something, more outside of this way. And then if we got something like that and we had at least a 382 pullback on here, let me show you what I mean. So if it trades up to 886, we would want to see at least the 886, a TP1, because this is where you move your stop loss entry. Then you have your free trade. You already have your profit from here, right? Still big money trade. If this in silver on one contract is big money. But if you could get that type of move, then you could start connecting to another pattern. And then it's really just connecting harmonics after harmonics. And this is all we do. And then you're connecting the butterfly pattern. And then you can start predicting where price is going to go, right? You want to see the price reversal in this box. And then what do we have again? And then we have, guess what? Another cipher pattern, right? And that's what you should want to start thinking about, how to connect harmonic patterns and using bigger patterns, right? Targets, and then finding connecting patterns to drive them up to it. And then skipping take profits. You can still move. So say you want to trade to this butterfly, but we're going to get these off of here. Say you want to trade up to this butterfly level, this bat pattern level, or even this butterfly level. You can use your take profit levels, right? You can use your take profit levels to move your stop loss, get your free trade, and then have the potential, right, to get these big money moves, right? Because you can actually start thinking about the trades. Like there's a good chance it's going to trade up to this level. If you get this level in silver, you're talking big money in one contract, two contracts. It's a lot of money. And if you can trade up to this level, it's a ridiculous amount of money. So that's kind of what you want to be thinking about, connecting patterns, always looking left to find structures, and then really considering what you're looking for, important fib levels, and always changing time frames to find structure around those levels, and then understanding where your stop losses are and how to manage your trade by taking profit and moving your stop loss to entry and enjoying the free ride. The more free rides you have and open trades you have with no risk to your account, right? Because your stop loss is already moved to entry. That's where the big money trades are. Because those ones can actually lead to the real movement in your account. Because if you're trading futures and especially in trading silver, price per point levels, you're talking about big money in silver. Um, I am an investor in silver. I have a lot of physical silver, long term investment. I am expecting a larger move in silver. I don't really trade it a whole lot on the paper side, but that's how you analyze futures contracts and connecting patterns, using structure, using multiple time frame analysis to use lower time frames to connect them to high time frame targets, right? Because you get a lot of these guys, and it's you just get people that are really starting to say you can buy down here. Yeah, you can buy down here, but people don't see the cipher pattern right here. That's the issue. They're just saying you can buy down here, but they don't understand that there's a pattern right here. Right? There is a cipher pattern right here. Then you can start saying there's a good chance this cipher pattern is going to trade up to this bat pattern. Yes, but you cannot just sit here and say, because there's a bat pattern here, I'm going to buy down here. That's not how it works. Where's your stop loss if you're going to buy down here, right? You don't have one. So that's the issue. There's actually another high time frame pattern here, which I'm not going to even get into. But you'll know that this is an important fib level. If you really start using your fib, your fib and understanding how it works, understanding this is the golden ratio, and then this is where you find low time frame patterns, right? And you can see the same pattern we just talked about in here. It's not as clean because the B drive is a little bit low, but it still works as a cipher pattern, right? So that's kind of just how we trade, how you can get incredible risk to reward, and then understanding how to change time frames and find really low risk opportunities, and then you can get really good risk to reward, incredible risk to reward. And that's pretty much how we actually trade every single day, and we trade this way across all sectors, equities, futures, SPX options, you name it, we trade it. That's how we trade it day in, day out. But a lot of guys are, I see a lot of people teaching, harmonics and posting stuff, and it's just a lot of people just don't know how to use them. And then what happens is everyone says they don't work. They don't work because they're not used in the right way, and that is the issue. If you really understand harmonics, they do work, and they work really well. Um, I could show you a trade that we took on Friday. There's a couple in here, but I'll just show you one. Now, this is in a very important fib level, right? And I'm going to show you the same exact pattern we traded. And then this is where it really gets interesting. When you're talking about risk to reward, and people say that, 4-to-1 is a good risk to reward trade, I think people really have the wrong idea of what's possible when you trade low time frame harmonics. All right, I'm not going to get too deep into this because this is really getting into, our methodology and how we trade on a low time frame. But this is the same pattern that I just showed you right there, and we went short right here, right at 77 was the entry, right? So if you start thinking about what's possible with harmonics, right? If our entry was 77 with a 2-point stop loss, and then you start thinking about what is possible, right? Let me just show you this. 300 points, 300 plus points. If you're talking about $20 a lot, right? And then you're doing 3, 4, 5. We have guys that trade, 10 lots of NQ. And then you start doing the math of what's possible with a 2-point stop loss. I just try to explain to people, if you're talking 2-to-1, 3-to-1, 4-to-1, we're not even smiling at all unless it's 20-to-1, 30-to-1, 40-to-1. These are the real trades, right? When you can really start doing this with a 2-point stop loss, 80-to-1, that's a good trade. This is a really good trade. This happens, I wouldn't say every week, but it happens at least 2 times a month. And then we even go well above and beyond this, believe it or not. 100-to-1, 150-to-1, 200-to-1, they absolutely happen. Are they hard to hold on to? Yes. And we're also using different harmonic methods to find out where to take profit. And you better believe that we took profit right here. And if you see what I'm using and how I'm doing it, we took profit right here. And then guess where we went short? And it's the same exact thing. And if you guys really start to understand what's possible with learning this stuff the correct way, then you can see how to get back into a trade. You can flip a short trade back long and then go back short again, right? And then that's where the big money is. And that's what people don't understand. And this stuff happens every single day. And then if, I know it's probably really hard to believe, but I can tell you exactly where we flipped this long at the end of the day. And ES2 is the same exact pattern. But if you notice this pattern right here, right, what this one is, and then you have to understand where we took this back long right at the close of the day. There was guys in our room that took this in SPX options, right? Because it was the same exact pattern in ES. And you'll often get the same exact patterns. And I'll show you where they took the ES or SPX options. I'm actually waiting for the same exact pattern right here. And I will take this long. You have the 89 EMA confluence. Not a lot of structure on this trade. Hold on one second. Not a lot of structure on this trade, but we have the 89 1 hour 89 EMA down here. So I have interest in this level. I didn't mean to do that. So that's how we changing time frames, right? And you have these two important wicks here. Not a lot of structure. I even look a little further left, but you want to see the immediate looking left, and you're trying to find structures in important breakout levels and candle closures, like I said. But we're looking for this 89 EMA, right? And then we're looking for the same pattern. But I'm going to show you where we flip this thing long on a low time frame. Remember, harmonics work really, really well. The real money in harmonics, the real money in harmonics is the low time frames where you can get 2-point stop losses and get 10, 20, 30 to 1. But in a matter of, if you're talking in minutes, right? In minutes at the end of the day, and you'll often see them at the open and at the close of the market. But guess what pattern it is, right? It's the same pattern that we took on the top and we flipped it long, right? So you see the same pattern right here. We took this one in NQ, and then we took this back long at the end of the day. A few guys took it in SPX options, 400% in I think 7 minutes or something. And that's nothing. There's guys in our room that trade SPX options that are making 3,000% returns week in and week out using 1 minute time frame patterns. It is absolutely incredible. But this is the name of the game. All I can tell you is I wish there was more people that understood how powerful these are and what is possible, because it will really, really blow your mind. I'm just going to show you the stop loss on this pattern, right? And this is the name of the game, guys. If you can start understanding how to change time frames, where we went long on this, again, entry 1 right here, entry 2 at this last pin bar right at 1.272, and then you're talking quick money from here to here. This is $50 a point. You're talking, in minutes wise, it's literally 15, 20 minutes. Sometimes you'll get these moves in 1 minute. So this is 5, 10, 15 minutes. You're getting 19 points with you're talking that it's hard to actually count the stop loss here, right? We have a tweezer bottom inside of the window. I mean, a 1-point stop loss, that's the type of stop losses you're getting for a 20-point move. That's a 20 to 1. And then if you look at what it was on the short side, again, we didn't take this one. Some of the guys did take this. This is actually another pattern right here. I took NQ and I was in it with size, so I didn't even look over here. But I was using, again, the reason why I was looking for this pattern was because it was in this cipher, right? And then if you understand why, if you start looking for harmonic patterns anywhere, you will get chopped to pieces. But if you understand where to look for them, right? And you have to understand if this thing is hitting 786, you can also trade NQ on a low time frame, right? So you have this butterfly right here, and then